Hello everyone and welcome to my channel. Let's start by taking a look at how the major markets held up during the last year. I'm actually gonna look at the year-to-date percentages, and year-to-date is almost 1 year. It's almost the end of the year, so happy holidays for everyone listening to the video or watching the video. So let's get right into it. Let's start with some major index like the SP 500. Like if somebody starts learning something about the stock market, first thing they'll probably learn about is the S&P 500 index, and that's one of the most known indexes in the world and probably the most heavily invested in. Has a lot of money, so let's see how it held up during since January 1st. How did it held up? Okay, something happened with my music or what? Sorry about that. Yeah, so we can see right here that actually let me zoom in a bit and maybe don't show the bookmarks to be a lot cleaner. Perfect. So as you can see, year-to-date percentage change is down 19%. Now, I don't think that's bad. I think it's really healthy for the market that the S&P is down 20%, almost 20% over the year. Hopefully it doesn't go much further. Although I believe fair value compared to GDP is somewhere around 2400. In order to not get into a severe crisis, financial crisis, I think it would be best for the S&P to just move sideways, like for the next 5 years. I actually think that would be the best outcome for the overall economy. Now, obviously, if we would have an honest financial system, based on gold, the story would be totally different. We would not be talking about the S&P at almost $4,000 for sure. It would be quite lower, because the problem with the current financial system is high levels of debt. So let's look at the perfect money. Gold, how did it held up year to date? Down 1.5%. Now, in nominal terms, that's pretty good. In real terms, and I don't think I can adjust for inflation here. I'm gonna try and pull up a chart. So gold price inflation adjusted. Okay, I think in macro trends we can look at inflation adjustment. Right, so adjusted for inflation, gold did not do so well, overall. Adjusted for inflation, gold is actually cheaper than it was in 2011. So yeah, even though if in nominal terms it kind of held up, it's only down 1% year to date. In real terms, gold is also down, but that does not mean that you should not own gold. I mean, for me, it's actually really nice that year to date in real terms it's down, and we're talking in dollars, because in my local currency, gold treated me really nicely. This is current year. Let's change this to daily. I bought most of my gold right around here in 2020 March. I think 22nd of March or 19th of March I placed an order, and then I tried to buy on the dips, and as you can see in my local currency, gold treat me really nicely. Silver, it kind of held up. I also try to buy on the dips. It's better. I try to not buy into the these huge moves, just like now. I'm avoiding silver a bit. That doesn't mean I'm not gonna buy again. I will. I'm just waiting for a pullback, because pullbacks always happen. Always happen. Always. Sorry for my English, but yeah, I'm managing. Pullbacks always happen. You just gotta be patient. That's what I learned. And same for crypto. Pullbacks are gonna happen. Now, crypto is, for me, is just pure speculation. That's it. Crypto is just pure speculation. And also maybe have something outside of the banking system. But honestly, without a bank account, I cannot buy crypto. The only way you can get, not really buy, you can get crypto without a bank account is to mine it. Then you are outside of the system. But gold and silver fulfill that role for me of owning something outside of the system. And gold and silver are the perfect insurance for me. Right. So moving on to silver year to date. In nominal terms, silver is up. Silver is up 3%. Again, I bought a bit of the dips. I didn't quite get the exact dips, but I bought somewhere around here. And I think somewhere in August, somewhere around here, I bought like 2 tubes of Noah's Ark silver coins. And now silver is up again, so I'm not buying right now. As you can see, a bold prediction would be that silver might head back. It's really bold prediction, because this $22 per ounce is gonna act as support again. So more realistically, maybe it's gonna come back down here in the next few months. If it does, I'm probably gonna buy another tube of silver. And for my European friends, I'm gonna show you where I'm buying my silver from. From France. Je suis d'accord. It's from France. The site is totally in French. It shouldn't be a problem. Just use Google Translate if you don't know French. I don't know French, but I managed. Why I'm buying from here? And again, I did buy. I'm not sponsored by this site in no way, shape, or form. I just like them because they deliver in the time they say they deliver, and it's quite cheap. It's quite cheap compared to other sites. Now, if you have a recommendation of other online dealers, please share it in the comments below. I would be really interested. You know, I love competition, but this is my number one go-to site to buy silver. So yeah, right now it's pretty expensive, right? Pretty expensive. I prefer to purchase a tube of Noah's Arks below 500 euros. But yet again, if we take into account inflation, you know, it's getting cheaper and cheaper and cheaper. So silver did great this year. Yeah, it had a big dip. This was a big opportunity. I think I did a video in the summer calling for $18. Not calling. It was not me calling. I also, I'm watching, people in the sector that are much smarter than me. Obviously, they are a lot more informed. I'm just a financial education student. I'm a hobbyist. I care about my future, but I have very limited information. But the information that I have, I also like to share with you guys. So my rule on buying silver is to to buy on the dips. Like for this dip, I did not expect it to to actually continue this far long into late summer, even autumn, because I was expecting this $22 level support to hold, and I rushed in a bit. But buying here is still better than buying here at the top of the hype, right? I just was patient. I waited for the RSI to get close to 30, and I made a purchase. So, but that does not mean that it cannot go lower. Of course it can. Of course it can. But I was still happy with my purchase. And again, when I bought in August, I think in 30th of August, something like that. Probably I bought here and went down a bit. Am I mad? No. No. Of course not. Of course not. So always be patient with silver. Now, this is in US dollars. Looks in an overall downtrend. But in my currency, it looks a bit better. It looks a bit better because my local currency is getting devalued a lot more than the dollar. So I'm really happy with my gold and silver purchases. Again, I see them a lot more as insurance and not speculation or not even investments. They are savings and insurance. Right. Let's see one of the most hyped stocks in the past, let's say, 3 years. How did it do year to date? Well, I would say not so good. 65% down. And I believe Tesla still has a long ways down. A long way down. Let's go back with some music. Perfect. Yeah, I have it on my watch list at around $50. Let's go to an actual chart. You can see I have a skinny line over here at around $50, and I believe it's gonna go home, This trend continues. It's gonna go home, right? Tesla should do something like this. And this is a log chart. It doesn't look that bad because it's a logarithmic chart, but look at the linear chart. Tell me this does not look like a bubble to you. Now, granted, for the people that bought here, good on you. I was not really that interested in investing in stocks back here. I was just somewhere in the spring of 2019 is when I started educating myself. And yeah, Tesla was still overvalued back then, even at these prices. But good on you, on the people who speculated that it might do something like this. And for the record, I don't think it would have done something like this without the stimmy checks. There's no way Tesla would have done something like this. And now that the stimmy checks are gone and the Fed is tightening, you know, they are selling treasuries, they are hiking interest rates. It's really hard for people to buy Tesla right now because they don't need to buy Tesla. They don't need to buy Tesla. They need to put food on the table, right? Because their living costs are going higher and higher. So I think this is very healthy. This, what's happening for Tesla, is very healthy. Should take a price channel. No, this is a Fibonacci. I think this is the channel. Yes. I think if this continues, and it might be like that, but let's say it's gonna be like that. And Tesla should be coming home. And it could be like this. Tesla is heavily oversold, so not financial advice, but on the short term, it could go like this. You could have like a 50% or potentially 80%. You know, Tesla could do something like this. Why not? It's already been there, right? This trend line could be reached again. But you know, next month something might break out, or actually break down in the global financial economy, you know, and it could just crash like this. So this is probable. It's not impossible. It's probable this could happen. But the probability is also high that this might continue like so. I mean, taking another price channel, you know, this could also happen. I mean, yeah, it's on a linear, doesn't look good, but this could also happen. We could go like this, like by March we could be already home. So I'm a buyer of Tesla, like below 30. I think I'm gonna buy heavily. Why? Because their financials actually look pretty good now. They have positive free cash flow, lots of it in the last 4 years. If you make the average, they have something like $4 billion in free cash flow. That's the average over the last 4 years. So if we take 4 and we, let's say, multiply it by 10 or 15, we get the total market cap of Tesla of around 40 to 60 billion dollars. What does that mean? 40 to 60 billion dollars market cap. well, it means Tesla has to go down a lot. Like 80 to 90%, something like that. And it's not impossible. It's not impossible because what did Tesla do since the all-time high? It's down 70%. So if you think it cannot go down another 70%, something like that, you might need to reassess. I think it can, for sure, and it should. It should. Now, again, below 50, I have it on my watch list. And probably if it goes down another 70%, I'm gonna start buying heavily. So I'm gonna actually move this line around here. And anything with below 35, considering no splits happen, even though it's adjusted splits or reverse splits, whatever. But currently below 35, I'm gonna probably buy a lot of Tesla. And also another stock that it's actually a really high quality stock, right? But it's overvalued, right? It's overpriced. It's Apple. And when people give up on Apple, that's when I believe we are close to a bottom. So far, people have not really given up on Apple. Apple is down 27%, which is substantial. But again, I think Apple will come home sooner or later. Right? It should. It would be very healthy for the economy for Apple to do this slowly, but nothing to say that it could not happen like this, right? Actually, a lot more abruptly. It could happen like this, you know, by summer, Apple below $90 could be a steal. And we can use the everything money stock analyzer tool for both Apple and Tesla. You know, 8 pillars. As you can see, if you take into account P ratio and free cash flow, it's overvalued. But everything else looks amazing. They have very low debt, so the stock is not going bust anytime soon. And they have this stock analyzer tool. It's basically a discounted free cash flow model, and you can put in your assumptions here, and I'm usually going pretty conservative, but close to what happened in the past 10 years, you know. So last year 7%, so let's go 7, 8.5, 10. Profit margin 22, 23, let's go 25 here, 24, 25, 27. PE in what's gonna be the PE in 10 years. So everybody knows about Apple. I'm not gonna put really no low numbers, but also not really high numbers. So let's go with 12, 15, 18. At 18, a stock is usually a bit overpriced, but being Apple, everybody knows about Apple. So I'm gonna do the same for free cash flow, because over long periods of time, PE and earnings and free cash flow should be about the same, and desired annual return 12, 14, 16. This is the margin of error, because you're making higher assumptions. That means you want to buy the stock as cheap as possible, because in case these assumptions don't fulfill, you might, you want to buy the stock a lot cheaper. We hit the analyze button. Again, check out their channel. They have a YouTube channel. I learned a lot from them. So yeah, based on my high assumptions, Apple should be somewhere below 120. Mid assumptions 95 to 100. Low assumptions 83. Let's call it 80 to 90. So add to watch list, notify me. I'm not gonna buy at 120, and this is not really given up on Apple. This is, let's call it a fair price to Apple, but prices can go below the fair price. So my target is probably below 90. And if we can look at this really nice trend line of Apple, it can go to the top of the trend line, it can go to the bottom. This is a big severe bubble, and I think Apple has to come down here in this trend line. So as you can see right now, below 90 is where I'm starting to buy Apple. Until then, I'm not touching it. And even though it's a great company, I don't want to overpay for a great company. I want to be patient, and I want to wait for the right price. And again, over time, Apple could go sideways and the fair price could go up. When these two meet, I'm buying. And that's valid for every single company that I'm buying. When price and my opinion of value meet, that's when I'm buying. So thank you guys for watching the video. I hope you took some valuable information out of it, and I'll see you next time, probably next year, but I might surprise you with another video in a few days. Who knows? We shall see. Alright, take care.